Good morning. This is Friday, 8th of May, 2026, and the Nifty 50 set a constructive tone for the week's finale. Today, the index closed firm, led by cyclical leadership and renewed foreign inflows, with breadth tilted in favor of gainers. Market sentiment was lifted by better than expected corporate cues and a softer oil complex, reducing input cost concerns for many sectors. Internals showed healthy participation from midcaps as well, but the headline drivers were select large cap earnings and positive commentary from boardrooms on demand outlook. For traders, the near term technicals suggest controlled momentum, while investors should watch global cues and domestic macro data that could influence the next directional leg. Titan was one of the standout gainers today, and for good reason. The stock reacted strongly to a combination of resilient demand commentary and margin surprise in discretionary businesses. Jewelry momentum remains a structural story for the company, and the management's focus on retail expansion, premiumization, and operational pickup resonated with investors. Watches and eyewear also showed signs of recovery, adding to the positive narrative. From a valuation perspective, the premium multiple is supported by strong brand equity and steady cash generation, but any investor should balance that with sensitivity to gold prices and discretionary spending cycles. Traders picked up momentum plays, while long-term holders cheered the improved operating cadence. Apollo Hospitals attracted buying interest as investors priced in higher utilization and improving outpatient volumes. The rally reflected confidence in steady revenue per bed metrics, expansion into higher margin services, and continued integration of digital health initiatives that boost long-term profitability. Recent management commentary around asset-light franchise models and diagnostic network expansion helped the narrative, and margins appeared under less pressure than feared, despite cost inflation. There's room for multiple re-rating if case mix remains favorable and receivables stay controlled. For cautious investors, key monitoring points are occupancy trends, AR days, and capex cadence. For traders, the stock offered a classic healthcare rebound trade amid defensive flows into quality names. Asian paints closed strongly today as the market digested encouraging signals on demand recovery and effective price-cost pass-through. The paint cycle is showing signs of normalization, with urban housing repairs, rural demand, and small project activity contributing to steady volume upticks. Management's focus on portfolio premiumization, cost efficiencies in raw materials sourcing, and channel modernization is being rewarded by investors expecting margin tailwinds. The company's distribution muscle and brand leadership continue to offer competitive advantages, though raw material volatility and an elevated competitive environment remain watch points. For investors seeking exposure to cyclical recovery in building materials, Asian Paints presents a structural case, while traders reacted to the technical breakout on heavy volume. To wrap up, today's market action saw focused buying in quality large caps, Titan, Apollo Hospitals, Asian Paint, driven by operational beats, constructive commentary, and improving demand signals. As always, balance short-term moves with longer-term risk management. Check valuations, understand catalysts, and set clear stop losses if you are trading. Remember, re-rating can be quick, but so can mean reversion, so size positions to your risk tolerance. Thanks for watching this market snapshot for Friday, 8th May 2026. This is not financial advice. Do your own research or consult a licensed advisor before making investment decisions.